All right, good morning everybody. We're going to get started here with our pre-market analysis on the S&P 500 futures market for Thursday, February 24th, 2022. I'm going to make this pretty quick here this morning, so we're going to dial all the way down from the high time frames down to the short time frames and take a look at what's going on. Obviously, we've got a big sell-off in the market yesterday, which was basically the expectation we had coming into the open. If you were here for our pre-market yesterday, we talked about seeing the bearish divergences off of the highs from the day before yesterday, and then we saw the bearish divergence off the overnight high. We did see some other things down off the lows, but the 4 hour wasn't necessarily agreeing, and so we didn't really have the strongest case for a bullish divergence off the lows. So that sell-off off of the overnight high was the expectation. So let's go ahead and take a look at everything. Now you can see that our yearly, we're now down to almost 75% of all of last year's price action. So kind of just interesting to note there, 50% of the previous year at 42.08. We've gone ahead and broken right through there. On our quarterly chart or our 3 month chart, what can we say? Nothing has really changed other than the fact that this candle has now gotten a little bit more exaggerated to the downside here. And on Monday, February 28th, the last day of February, this candle will officially close. And it's looking like I don't think much is going to change with the actual RVI level here. So we will have a very glaring bearish divergence. At this point, we're already, what, 400 or 500 points down. So it's a little too late to act on it. But we've been monitoring that and watching it ever since that candle started to form back in, I believe, November of last year or December of last year. So that's all been there. Nothing new to really add to the picture. The thing that is kind of important, I think I was muted there. So I might have to go ahead and start over. Sorry about that, guys. So let's go ahead and start back over here. I was just saying that the yearly, I mean, there's nothing really new to say other than the fact that we've now broken through 50% of the previous year and now almost down to about a 75 retracement of all of last year's price action. And then down on our quarterly here or our 3 month chart, really not much to say. The candle is now just a little bit more exaggerated to the downside, obviously, after the sell-off that we got. So a little bit larger of a range on that candle now. This will close on Monday. So on February 28th, this will close and we'll have an official candle. The signal, I'm guessing, is going to be about the same. So we have a nice, clear bearish divergence that we've been watching and noting pretty much since this candle started forming back, I think, in December. So back in December, the 3 month was showing the potential divergence. It's still there right now. Let's go down now to our monthly. And there's really not much to say up here on these high time frames. We've been watching bearish divergences ever since November. So back in November, we started kind of saying there's something telling us that there's some, trouble in the market for the bulls as they push. It took a little while for the actual failure to happen. In fact, it was what, 1 and then 2 months, and then on that second month we started correcting here coming into January. So all in the books there. And on the monthly, the only thing I could say is that the deeper retracement scheme, looking at the leg from the March 2020 low, the correction from the COVID correction, that low all the way to the all-time high, we're now this retracement scheme that I thought was probably a little too far away from current market price when we were trading up here at 4,800. It looks like these might end up becoming relevant here if things start to continue to stay heavy in the market. So if things do continue to sell off here, you want to be aware of the larger Fibonacci retracement scheme for this leg. And so 38%, again 38.2 is right there around 37.7. We've got 34.60-ish, right around 50%, and then the 61.8 brings us all the way down into about 31.36 here, I believe. And then we'll break through where we got this really strong bullish divergence a long time ago, right off that 31.97. So if that breaks, it's opening us up down into this lower area. So let's start getting into well, I guess let's take a look at the weekly and then we'll get into our daily and our intraday time frames. So in the trade room yesterday, we talked about how price was still up around here, around 42.30, 42.40, give or take a few. And we did have RVI sticking all the way down like that. So I told you guys that we were going to watch this, but because of what the market was showing and the overall context in the market, I was not sold on trying to buy the market. Just because there was a potential weekly bullish signal didn't mean I was buying. I just was going to pay attention in case there was a hold here around 42.50 or whatever it was in that morning yesterday. Hold there and actually started chugging out from there, then maybe if everything started to align, I would actually hang my hat on the signal. But what ended up happening was all morning we ended up, and then through, especially at the end of the day, started selling off, and now here we are lower, and now there's no divergence. So that's why I told you we're just kind of watching it. If things change, we'll reassess, and if things start to come into alignment from that divergence, we could then expect the chug back up to get through, remember, 45.70 to 45.80, that major resistance zone, and then go back to the all-time high. That is not occurring, and that's not what we expected. We still, despite the potential bullish divergence, again, here it is on the daily, seeing it build up, they ended up selling off. So we're going to get rid of those signals, or those potential setups that did not end up following through. And again, our expectation was it was for the sell-off, but we wanted to watch that in case we did find some stronger support. So here we are, we're selling off. We basically got through that major low that we talked about at 42.1275 here. There's another level that I marked just a little bit further down, somewhere around, let's just say 41.55. And I think I have an eye level on my chart somewhere right around there. And that was our next kind of expected little zone that we could expect some type of hold or bounce. But as you can see, when things start to sell off, anybody who's been around the markets for just a little while understands when the market starts to correct down, it can get pretty violent, right? So there's that saying that the market goes up as an escalator and then comes down like an elevator, right? So it's just kind of a nice chug up, nice chug up, nice chug up, and then all of a sudden, bam, the whole thing drops out. You end up retracing months and months of price action in a day or two. So these levels to the downside, I would not be trying to buy them trying to catch a falling knife. These are just levels that we want to be aware of in the grander scheme. So from this daily perspective here, we have all the nice bearish divergences off the highs. Basically no bullish divergences on any of these pullbacks except for this little pullback here back in January. But all these other pullbacks, no nice bullish signals, a whole bunch of bearish signals, and we're on our way down here, retracing this or extending out from this leg where we got the 61.8 hold, and the 27 brings us to 40.50, the 61 all the way out to about 38.47. So those two levels, I believe we have eye levels on our shorter time frame charts that are sitting somewhere around that level and somewhere around that level. So I think I have that covered on my short time frames to make me aware of these levels, but just be aware that that's what the extensions look like to the downside here, the 100 all the way down to about 36.20. So let's take a look here. These are the new levels. So remember, I like to box out all the major areas of chop. And as you can see, pretty much every major delineation is an area in the market where the market will typically turn. It's not perfect. It's not going to be like right here. We didn't come up and hold 44.46 there nice and cleanly and sell off. It actually pushed through. But for the general scheme of things, you can see these boxes are outlining the major areas of chop. So now that we're selling off and coming down into uncharted territory on my chart, I had to go in last night and start boxing out all of the other zones that we have below us. So we're sitting here just around 4100, give or take. The next major zone isn't all the way down to just about that 100% extension of, actually, I might be using the wrong leg right here. Okay, never mind. I'm looking at the wrong extension. So we've got these new boxes. Let me just go through here. This general, I think I went all the way down. Yeah, right down to this spot right here at 31.71. So I started outlining the major chop zones in the market. I've got them on there, and then I started building new eye levels based off of the structure. So we'll get into that in just one moment here. I just want to look at what the 4-hour is saying off of these lows. So what I always look for is some type of divergence just to kind of give me a clue. And then if I see all the other time frames agreeing with the same signal at the same level, it's giving me a little bit of a bias for what I could, some type of expectation of what could happen next. Of course, as traders, we know nothing always works perfectly or works every time. So that's where your risk management and everything comes into play. But just looking here, don't see a nice bullish divergence off the low. So that's giving me a clue. Again, on the daily as well, don't necessarily, well, actually might have to take that back. We might have the potential daily setting up. But again, you have to remember we're in a very strong correction. The 4-hour isn't agreeing. So what I just did there was I went back to the daily to see, is the daily also not having a strong potential bullish signal. And in this case, it looks like we could argue from that last 42.1275 low, we could be getting a bullish divergence. But again, I'm just watching this as I'm monitoring it to see what happens. Because I don't have the 4-hour giving me an agreement, I don't think that this has really got any weight to it. Usually we see a 4-hour and a daily alignment before there's a larger move, and there's no alignment here. So I don't see it on the 4-hour. And looking at the most local leg that we looked at yesterday, actually coming into the open, we highlighted this leg and said that we've got the 38 and the 50 right where we're finding resistance from the day before, and we have bearish divergence on the 4-hour. So we were watching that and saying if we couldn't get up through 50% of the leg, which happens to be that major swing low right here, that let's see, 43.67 actually to the tick, it's 50%. If we couldn't push up through there yesterday morning, we were more than likely, in fact, our expectation was we were going to continue to come lower. So we're holding this leg and we're now bouncing right off the 61.8. So I just wanted to mention that. So there might be a little bit of an argument for some support over in this area. And we're also right at the dividing line of that new chop block that I just mentioned here around 41.20, 41.19. In fact, if you just move the block down just a few points there to line up with the swing lows, that's almost exactly where we just bounced. So that's where we're at on the 4-hour. And now we need to start looking at if the market does potentially hold from here. Again, just not saying that I have the strongest clue for that, but just in case that happens, we need to look at what's above us as potential resistance and then what we could target to the downside if the bears continue to sell this market off. So let's go down to the 60-minute here. And on my 60-minute, I've got all that structure mapped out below us here. So let's take a look. If the market does hold from the lows here, I am noticing the 60 minutes got a really nice bottoming pattern right here. Beautiful bullish divergence off those lows, and it is that typical double bottom, that double touch. So there is again a potential daily clue down there, and then we do have an hourly. So not a huge alignment, but let's take a look. If this starts to bounce out of here, we get through that orange line there. We're contending with 41.51 to begin with. And then the 38% retracement up here is right where we have our eye level around 41.89. So there's a little, 5-point pocket right there that makes sense. And we're going to have to look at the 30-minute because there might be a major swing low in here just front running that 41.98. But generally here, if we can get through that orange line at 41.33, we've got 51.50, we've got that swing high, and we've got this 89 to 94, 95 area right here. What's really sticking out to me is 42.13 here. The market closed just a few points above that. The previous daily low, I believe, is 42.13 or something very close to that. We've got our major eye level sitting at 42.13, and remember, 42.1275 was that major support level that led to the attempt by the bulls here to continue chugging to new all-time highs. So that right there It's going to be really important this morning if the bulls do get some strength and they follow through from this bullish divergence off the lows. That's going to be an important level. Where was I? Um, that's going to be important right there at 42.13, give or take a few points on either side. Any further than that, and again, I'm skeptical of a bullish reversal from here, so I don't think that we're going to get some type of major breakout, but anything's possible. So if they do come up any further than there, we've got the 61.8 aligning here basically with this major swing low. So what's that number? 42.50. So right around 42.50 to 42.60 there again. A little zone there that would make sense to be trouble. And then that other major swing low is basically sitting there at 62. So that little range in there would also not be surprising. So just be aware of these general pockets in the market above you. And then again, we've got 50% of yesterday sitting there, that magenta line, and then the high of yesterday as well. Those would be two kind of interesting levels to watch if they continue to chug. On the flip side of things, we have to look at what's below us here. If we do find resistance at one of these levels that I mentioned or some other level, and it starts to sell off and we get through the overnight lows, we're pretty close to that first structure area at 86. But if that breaks, just going by what I'm seeing here on the 60-minute, it opens us up for just about a 40-point sell-off into 47. And that's just about the 27 extension of the most local leg. So those are some local targets to the downside. If you get short and you're looking to take profit, I'd be looking at those areas. And then all the way down here, once we get past 4,005, I mean, there's basically a bunch of open pockets. It goes down 60 points to 39.40. And as you can see, that's just about that 61.8 extension of the most recent leg down. And then after 39.40, it's all the way down to 38.22, almost a 100-point pocket there. And there are minor levels in between there, but that's that next major structure zone down there. So just be aware. These are the general zones that we want to be aware of coming into the open. I don't really have much else to add here. The market obviously is feeling very heavy, and there's no signs. There's nothing bullish going on in the world right now. There's all the stuff going with Ukraine. There's the supply chain issues. There's all the just all the issues going on in the United States alone. So it makes sense that it's time for the market to go ahead and take that breath in and start, building up, building up that strength to eventually get support and get some type of rip higher. The S&P 500 historically has been in a bullish trend, so if things really start to change here, it should be an interesting few months here. Let's just put it that way, to see what ends up happening. So I think that's basically it. If I could just sum everything up for you, if you look to all the high time frames, there are no clues that the bulls are going to jump in here and start to turn things around. Everything is pointing to lower if we look at these higher time frames. And then when we get down to our intraday time frames, there are some little clues that we could get a bounce from the overnight low, but I wouldn't be banking on it going in full size because it's not a huge confluence. There's just a couple clues. So my expectation is a bounce from the overnight low here, but to find resistance at one of the levels I just mentioned above. So if they start to bounce up, I'm expecting more so resistance at one of these levels and then that push down to lower lows. Of course, anything's possible, and that's why we outline everything. We've got levels, so no matter what happens, a bullish push, a bearish push, a sideways chop session, the market, we have our levels of interest. In fact, I want to just point something out right here just to kind of pat myself on the back, and that is going into, let's see here, give me 1 second. So going into, was it Tuesday's market? So Tuesday after President's Day, the overnight session, we came down and we bounced literally to the tick off of one of our minor eye levels, like sitting there. I got this big sell-off, bam, right to our minor eye level, pushed up, pulled back, and we held our next eye level, the major eye level here, pretty much through the overnight session. almost to the tick, and then and then later on in the session, after this push off of 62, notice that we came up and we pulled back and held 24.50 almost to the tick and pushed almost to 61 there. And then in the afternoon, and this is back on Tuesday, we sold off whatever it was, 100 friggin' points, and came down and literally bounced right off 62 again, came up, and then I believe in the overnight session we couldn't get through 24.50. So these levels, even when we're sideways and we're chopping, I told you these are delineating all the major chop zones. So even when you're in chop, these levels are going to be relevant, just like they were 2 days ago. And then coming into the overnight session, you can see we basically came into 41.11 in our holding, but not as nice and clean as what we had here on Tuesday. And these clean holds of the major eye levels happen over and over again. So don't discount these levels even in sideways chop. They end up being extremely important. So that's all I have. I got to get going. I'm heading out to the Las Vegas Traders Expo, which will be going on today, tomorrow, and Saturday. So anyone who's in Las Vegas, give me a Discord message and let me know, and come check out the Traders Expo. And with that being said, have a great weekend. See you guys on Monday when we do our larger time frame analysis. So have a great trading day, and I'll see you then. Bye bye.